Weekly watch list and stock market outlook video. Let's get right into it. So because it is summer, there isn't much liquidity in the markets. That's just typical seasonality. Big hedge funds, big players are out playing golf, enjoying the summer, not really spending much time in the markets. You take that plus 2021 being very choppy, it can definitely wear you down as a trader. But you know me, always staying optimistic and always ready for the next opportunity. So what we do is go day by day, try to navigate the markets, and if nothing is there, we take a step back and wait for the opportunities to come to us. With that being said, it has been a very difficult market to navigate because although the indexes like the S&P and the Nasdaq are in all-time highs, it has been pretty much led by the mega cap names, while many other names, mid caps, small caps, have been lagging. And when they did find some sort of momentum, they never really followed through, which is where the frustration comes in, because you see the markets going up every day, but the stocks you're watching, the stocks you're trading, they're just going sideways, going down, not even doing much. So it does get frustrating. And if you're going to continuously trade, this is the time to be very selective with what you're buying, or back off until summer ends. Those institutions step back in, the liquidity comes back, and we get more of a sustained move and convincing market. Because right now, I'm not convinced at all. And if we even take a look at MarketSmith, we see here that currently we have 7 distribution days on the S&P 500 and 4 on the Nasdaq. So that is a little bit worrisome. We are pretty resilient as the market really isn't going down, and when it does go down, we find support very quickly and bounce back up. But the increased distribution days, as well as not much action in the broader market, does get a bit concerning, as how long can we really sustain this type of action. So this is something that I am definitely paying attention to. But besides that, let's just get right into it, starting with the Nasdaq composite. So like I've been saying, we have been pretty resilient, broke out of this consolidation, retested it nicely, bounced back up, and now we're in all-time highs. Volume has been pretty low, but that is due to summer months, like I've been mentioning. Finding support after 21 EMA for the past 2 to 3 times we've retested it. And just continuing higher. So I just want to see it continue this slow uptrend, but with more action towards the broader market. I don't want to just see 5, 6, 7 stocks leading up this whole market. I want to see more action being joined by multiple stocks. If we take a look at the S&P, same exact situation. Broke out of this consolidation, retested it perfectly, bounced back up. Now we're in all-time highs. No issues there. If we take a look at the Dow Jones, same thing as well. Retested it, more than retested it, actually undercut it below the 50-day, but climbed back up, and now we actually close in all-time highs, which is great to see. So what we see in the indexes with the S&P, the Dow Jones, and the Nasdaq composite, this is all bullish action because of the fact we're in all-time highs, but the overall broader market, like I've been mentioning, gives us a little wall of worry. So outside of these 3 main indexes is where we really see what's under the hood in this market, starting with the IBD 50. If we take a look here, it's basically still in this chop zone. We had a nice rally from when we undercutted the 200-day moving average, but we did find some resistance here at this little pivot zone. So we got to see how it acts in the next coming days, next coming weeks. If we could get through this, that would be very bullish for the market and for growth stocks as well, if we get over that 47 level. But if we do get rejected by this and then pull back and then continue this chop zone, it will just be continued chop for growth stocks, which is going to be very frustrating. If we take a look at the IWO, which is a 2000 growth ETF, Russell 2000 growth, same thing. We're still in the chop zone. We found some support after undercutting the 200-day moving average, bounced off it here again. We did get above the moving averages, but I want to see if we could get above this 305, 306 level and then retest these 315 levels. It has been pretty much just sideways, up and down, very choppy for the past few months, all of 2021 really. If we see the IWO, IBD 50 chop zone compared to the S&P and Nasdaq composite, very different stories here. And the fact that I'm a growth trader and I trade a lot of growth stocks that pretty much focus on the IBD 50 and IWO has been very difficult to navigate. So essentially, if you're a growth trader like me, it may be best to just ease up a little bit, only find the best of the best, because there are some names that are doing well, showing signs of strength and looking to break out all-time highs. We also have some names that broke out to new all-time highs with earnings gap ups, so we're going to pay attention to those names. Those names seem to be the strongest right now, and we're going to go through them when I go through my watch list for the week. So if we take a look at the IWM, which is the Russell 2000 ETF, pretty much same thing, still in this consolidation, all of 2021, still figuring it out here. continuously find support around that 211 level, and finding resistance around the 233. So it's basically just sideways until we find a direction. Hopefully in the next few weeks we could get above this 234 zone. It has been in a base for almost 8 months now, pretty much 7-8 months. So if we get above it, we could have a huge breakout for small caps and growth stocks. That'd be very beneficial. And if we take a look at the VIX, so after this strong move up in mid-July, we've just been slowly going down from there. We have been decreasing tremendously for the past couple of days, and we actually are back below the 17 level. So we want to see how it acts in the next few days. If we just continue going down slowly, or if we get another pop-up in volatility, who knows? We'll see how it goes. And if we take a look at the ARKK ETF, which is basically another gauge of how growth stocks are doing, we see here after topping out in mid-February around the 159.70 level, just been basically breaking down and consolidating ever since. Some good positive action that we see is we are starting to get some higher lows here, higher low, higher low, higher low. But what we really need to do is get above this 131 level, which is kind of like this base that's been occurring ever since it's topping out in 159. If we could get back above this 131 level, that would be very, very good for growth stocks. As of right now, we're still in this consolidation zone, but it is starting to make headway. As like I said, we are getting higher lows, and we are back above all of its moving averages. So if we could find some momentum, find some strength, and get above this 131 level, as well as the IWM get past their little consolidation levels, this would be very beneficial for a strong end to the year for growth names, as it has been a really big struggle in 2021. So that pretty much sums up the stock market outlook. At the end of the day, we really want to preserve our mental capital because of how choppy and how mixed everything has been. It can be very easy to wear yourself out. Earnings have been very mixed, so you want to be careful holding stocks into earnings. The overall market, like I said, has been resilient, but there's a lot of under the hood things that are going wrong, so we want to pay attention to that as well. I am still bullish on the market. I am still long, but things can change in a hurry, and with the increased distribution days, I will always be on my toes, especially the fact that it's summer. So that's something to look out for. You want to focus in on the strongest stocks in the market right now, and if they're not showing signs of any strength, you probably want to stay away from them for now until things change. So with that being said, let's take a look at my weekly watch list, starting with AMD. So AMD finally broke out, and I know many of us have been waiting for this, especially me. I actually missed this breakout, unfortunately, because I've had so much struggles with AMD in the past. So when I saw this move happen, I didn't really believe it, and I didn't really put my energy into it because of all the struggles that I had previously. It's a mistake I had personally, but it was one for me that I just had no conviction in, because every time I got into AMD previously, I would get stopped out quickly. So for this, I didn't really believe in it, and then once I found how legitimate this move was, it was kind of too late for me to enter, and I didn't want to chase. But that's okay, because with monster stocks like this and monster liquidity, there's always going to be alternate entries. So I'm really going to pay attention to possible alternate entries. If we see here, the 10 EMA is slowly catching up to price. I want to see it basically flag off the 10 EMA, see if we can get some sort of sideways action as the EMAs catch up to price, see if we can bounce off any of these moving averages for a potential entry. Obviously right now there's no actual entry point, but I just want to see how it acts, especially how strong this stock has been the past few weeks. This is definitely one to keep on your radar. Also, if we take a look at MarketSmith to show AMD, if we take a look here, it does show us how strong the quarterly EPS and sales have been for the past several quarters. If we take a look here, the past 5 quarters, 7 quarters, 300, 200, 125, 128, 63, 189, 250% growth quarter after quarter. And also sales, 50, 40, 26, 56, 53, 93, 99 has been showing huge growth, huge strength, giving us a reason for this move in the markets. So that's great to see. And the next stock we're looking at is CrowdStrike. So if we take a look at CrowdStrike, it has been a very strong cybersecurity stock as of late. It did hit all-time highs around 272.63, but squatted, and now we're kind of having this base on top of base here. So essentially what I'm looking for is a move above this 270 level on strong volume, and a close above the 270 level. We got above it a few times but didn't close above it, and I want to see a move above 272.63 on strong volume. We do have earnings coming up at the end of the month, so I want to see a pre-earnings run up, and that would be very bullish for the stock to see if we could hit that 300 level in the near future. CrowdStrike also has great fundamentals. If we take a look at MarketSmith, CrowdStrike here, if we take a look at the weekly, EPS growth quarter after quarter has been amazing. The past 5 quarters, 118, 125, 214, 750, 400%. Sales have been amazing as well. 94, 88, 89, 85, 84, 86, 74, 70. Huge growth quarter after quarter for earnings and sales. So that's exactly what you want to see for a strong growth stock, for it to continue its momentum. So the next stock I'm watching is DoorDash. This is another stock that has been starting to act very well. After undercutting the 110 level, has been acting very well with some higher lows and higher highs. We broke out of this pivot level around the 165 level and then retested it nicely and then broke out once again. We retested these highs, and then now it's just been kind of consolidating for the past few days. So we are setting up for another move higher. I really want to see it get above that 187 level on strong volume. Did have an inside day on Friday. Bounced off the 21 EMA, so it does look to be setting up for a move above that 187 level. If we could do so, that would be very, very bullish. As you guys know, I've been watching DoorDash for quite some time. See if we could get above that to retest those 200 levels and then see where we could go from there. If we take a look at the fundamentals as well, looking at MarketSmith, the weekly chart isn't really setting up as of yet with the RS rating of 66, but this is slowly getting there. Funds are starting to pile onto this as we've moved from 300 to 400 now. Fidelity Contra Fund is positioned in this as well. If we take a look at the earnings per share, it is not yet profitable, but is slowly getting there. And if we take a look at the sales growth, it is over 100% for the past 8 quarters year over year. So that's very, very good to see. Obviously, this stock definitely has a lot of work to do, but it is starting to set up for a strong move higher. So this is definitely one to pay attention to. The next stock I'm watching is DDOG. So DDOG just released earnings and gapped up into all-time highs. As you can see, this huge gap here. If you don't know how I personally trade earnings gap ups, I'm going to leave a link to my video that I made earlier up above, so check that out if you haven't already. In terms of DDOG, it broke out of a nice base here on strong volume into all-time highs. So for now, there isn't a real setup as of yet, but the fact that it gapped up 2 all-time highs and held the gap for the past 2 days, that is very strong. That is a very strong sign. I do want to see it hold this 126 level to see how strong this gap really is. It would be very beneficial for this stock, very bullish for this stock if we could do so. And I want to see this stock just continue higher or even just consolidate for the moving averages to catch up. So I wouldn't be surprised to see some sort of flagging action here. But like I said, no real setup, but just one to watch because of how strong the stock has been acting, especially in a market that's kind of just going sideways right now. This is definitely one to pay attention to as a new leader, because usually, like I've been mentioning for the past with big earnings gap ups, that's usually the start of a huge move. So let's see if this could continue higher. And taking a look at MarketSmith real quick, we see for DDOG, it just broke out of a weekly cup with handle and strong volume. The overall fund ownership is increasing all the way to 1,000 funds now. We see 3 strong funds that own this stock. And if we take a look at the sales growth, the last 8 quarters have increased by over 50%. And quarterly EPS growth has been over 100%, except for one quarter of March 2021 compared to March 20th was the exact same. So I don't know what happened there, but June 2021 compared to June 20th, there was an 80% growth. So maybe that's just one quarter that got out the way, but now it's starting to come back alive. EPS growth above 20%, 2022 estimated to be 41% growth. So these are all good characteristics of a strong stock and exactly what you want to see for a stock to continue going higher. So the next stock I'm watching after DDOG is INMD. If we take a look at the chart here, it's just been moving up nicely, continuously throughout the whole year, just continuously having higher highs and higher lows, finding support off the 50-day moving average for the past 2 times it retested it, and right now it's just been kind of going sideways across the 10 EMA. Basically for 2 weeks now, just been going sideways, finding support off the 10 EMA. Every time it touches it, just bounces back up. So essentially I want to see a nice move above the 118 level on strong volume. If we could do so, we could definitely continue higher, as this little sideways quick flag here looks to be just eating up all the supply. Not much selling going on. If you take a look at the volume patterns, a lot of these big green candles have been accompanied by very little red candles, so not much selling going on. This is continuously getting accumulated. I wouldn't be surprised to see this continue going higher. If we take a look at MarketSmith towards this stock, INMD on the weekly, if we take a look here, funds have been growing. Now it's around 200 funds. 2 strong funds have invested in this stock. Earnings growth the past 4 quarters, year over year, 26%, 104%, 130%, 325%, and sales as well, 49%, 60%, 62%, 184%. So this is exactly what you want to see. Increasing quarterly earnings per share growth increasing sales growth, which is why this stock has been just continuously going higher and higher. So that's no surprise here. So I really want to see it get above that 118 level on strong volume. And the next stock I'm watching is Snapchat. All right, so Snapchat is another stock that just broke out into all-time highs off an earnings report and broke out of this multi-month consolidation on strong volume. 117 million shares being traded on this earnings gap up. Since then, it's kind of just been consolidating nicely. It let the 10 EMA catch up to price, and it actually retest this breakout level of 71. And since then, it just bounced back up. It did retest the high of 79.18, but kind of just squatted, which was kind of disappointing, but it was on very low volume. So it's not too disappointing. What we want to see is a move above 79.18 on strong volume for it to continue higher into new all-time highs. And if we take a look at Snap previously, it is not shy of having earnings gap ups. For one, we had one here in April of 2020, and then we had another one in October of 2020, and we see how those played out. So since we got another one in July of 2021, and let's see if we could have the type of move it had in the past. If we quickly take a look at MarketSmith, we see the funds has increased from 543 to 1,444 in less than 2 years. 4 strong funds own this stock, and earnings and sales growth have been over 100% for earnings and over 50% for sales for the past 4 quarters. So that's great to see, and exactly what you want to see in a stock propelling higher. So the next stock I'm watching is SQ, which is Square. It is in a stage 1 base, and it did actually break out into all-time highs on strong volume on Thursday, but then it kind of squatted a bit and gave back some on Friday, but it was on lower volume, so that's good to see. Essentially, it has been basing since January of 2021, so 8 months in a base. The bigger the base, the bigger the breakout. So if we could get a strong breakout, get out of this turbulent zone above that 278 level and get above the 289 level and eventually hit that 300 level, there's lots and lots of room to run and have a huge breakout. If we quickly take a look at MarketSmith, the past 4 quarters in earnings have been 36, 39, over 1,000% and 267% growth. The past 4 quarters in sales, 140, 141, 266, and 143. So huge growth coming into SQ, and I am aware that some of it is because of Bitcoin, but still it is a very strong stock, and a lot of funds are investing in them as well. Over 5 strong funds and over 1,900 funds in total are into this stock. So this is definitely one to watch. If you could get out of this nice base, there's definitely lots of room to run. And the last stock I'm watching for the week is Tesla. If you take a look here, broke out of this downtrend line here nicely, kind of gapped up and kind of just consolidated ever since. Found support off the 200-day and 50-day moving averages a few times. We got above this 694 pivot here on strong volume. We did so, and the past 4 days have kind of just been consolidating and pulling back on lower volume. So I wouldn't be surprised to see a retest of this 692 level, maybe even the retest of a 10 EMA. But I would really want to see this retest it, kind of have like maybe a hammer candle or just bounce right off it and continue higher into above that 726 level. So if we could bounce like this, continue higher like that, that would be very nice to see. Get above that 726 level is really what I'm watching for. I am positioned in the stock. I actually bought it around the 655 level once it got above this candle here. I've just been holding ever since, so I am looking for a bounce off the 10 EMA to see if we could continue higher. If we take a look at MarketSmith for Tesla, we see here growth have been phenomenal the past 5-6 quarters, over 100% each quarter. Sales for the past 4 quarters have been 39%, 46, 74, and 98. And funds have been increasing as well. So I wouldn't be surprised to see this continue moving higher after kind of just going sideways and kind of just basing after it's topping around the 900 level. So that pretty much sums up my watch list and stock market outlook for the week. Once again, if you haven't subscribed, please hit that subscribe button, share with your friends and family, hit that like button if you haven't, and I also want you guys to comment 3 stocks you're watching for the week. Besides that, hope you guys have a great summer. Hope you guys have a great week. Take care.